Now, last week I warned about the risk of a rising dollar, and this is a safety trade that everybody turned their back on. And we knew it was predicting stress within the financial system, but little did anybody know that Friday night, President Trump would drop a bombshell on the world and send equity futures crashing and trigger a crypto Armageddon. And get this, we saw 1.6 million accounts completely liquidated. We're talking $19 billion evaporated within minutes. And what we're facing here is a rare earth hostile letter. That's what Trump's angry about. And it's not just China slapping back. They're about to idle American factories here. They're going to put hundreds of thousands of Americans on the unemployment line and potentially even send inflation surging at the worst possible time. Now, I warned you about rotating into the dollar, and my subscribers, they're cashing in big because they got stopped out of their equity longs ahead of the move on Friday, and we're already in long dollar, short euro, and even treasury positions here. Now, it's not too late because come Monday, there are more liquidations are likely to happen. Tuesday, the banks reopen. Watch out for what happens then. Now, let's take a look at China's aggressive move and why this trade war is far from over, because right now it appears we're on the edge of a global recession. As Trump announces additional 100% China tariff and tech controls, this will take the total tariffs to 130%. Now remember, at one point they were at 145%. Imports came plunging down. This time, markets massively over-leveraged. What we're facing here is further liquidations. It's just been learned that China has taken an extraordinary aggressive position on trade and sending an extremely hostile letter to the world stating that they were going to, effective on November 1st, impose large-scale export controls on virtually every product they make, and some not even made by them. The official announcement expands export restrictions on rare earth items, including 5 additional rare earth elements, refining technologies, and even equipment. It applies not just to raw materials from China, but also to goods produced abroad if they incorporate these controlled rare earths. And what this is going to do is require export licenses for most shipments. Now, this process is slow because the existing process is already slow. It's going to take months for companies to get these. Probably going to even require them to divulge intellectual property because China is holding all the cards here. And what they're going to do is they're going to probe into end uses. They're going to ask for information. Companies already said we don't want to divulge this. But again, China is going to ask for it. And what we're going to find out is some companies are going to be outright denied. But Trump acknowledged Friday that he could retreat from his massive tariff escalation if China backed down from threatened restrictions on rare earths, while saying it was still possible that he could meet Xi later this month. But these export controls, well, it's China's planned demolition of the U.S. economy, because what this is going to do, it's going to shut down our factories. And you're going to see everything from EVs to fighter jets, it's all going to grind to a halt. Because the issue, you think back to, remember this move that we're all going green, we're all going to drive EVs. It's not looking so good right now because the issue here at hand is China controls all of the rare earths. Think back. It wasn't just earlier this year that Ford had to idle production when it ran out of magnets. They lost millions of dollars. Other manufacturers at this time, they cited issues as well. You think about GM, Tesla, and that's just the tip of the iceberg here. Because the bottom line is China controls 70% of rare earth exports, and that's a staggering number. And they go into everything people use. We're talking consumer products, semiconductors, and fighter jets. And so now you get a picture of why the market reacted the way it did, because what we're seeing here are broader risks. And right now, economists are screaming recession. And more importantly, that dollar rotation playbook, it's going to save your portfolio from Monday's bloodbath. I hope you followed my advice last week, but if you didn't, it's not too late. I got some new tips for you. Stay tuned. Because what we saw on Friday evening, the largest liquidation event in crypto history. In 24 hours, over 1.6 million traders were completely liquidated. We're talking wiped out. And that was 19.13 billion. It's now erased from the books. It's not coming back. These accounts are at zero. Some of them even went negative. Now, it's far from over because what we're seeing here is the actual total is likely even going to be worse than that. We won't find that out until probably next week. Now, while the markets were plunging Friday night, my subscribers were sitting pretty. Let's take a look at that trade we put back on SMH on the 9th, because my subscribers got stopped out on the 10th for a nice 14.66% gain. But what was their edge? Is we give our subscribers risk control levels and we raise those stop losses along the way. So all of my subscribers were stopped out of their risk positions before Friday's carnage. And even better, our system already told them to get on their safety trades. That's why they're in the dollar, short euro, and long treasury positions. They're sitting pretty right now, and you can join us. We'd love to have you. All you have to do is grab those links in the description below, use the coupon code for your free 30-day trial, and stay tuned to the end of the show for more information. But one of the problems we're facing on Monday is while it's a holiday and the banks are closed, the stock market's open. And the problem is, for systematic machines, it means selling is likely to begin because they look at the closing value on Friday and then they're going to look at the futures market on Monday morning. And if they hit a trigger point, well, they're going to sell. And the problem is, as you see a rising VIX, that's a sign of stress too. And of course, we know they're systematic machines that trade against the VIX. As it goes up, they sell their equity positions. Not to mention, you've got high yield bonds crashing. You've got signs that a credit crisis is brewing here. So you've got a lot of issues going on in the market. The dollar rally, well, that was the leading indicator. And as we turn into next week, the Trump administration is now laying off 4,000 federal workers as the government shutdown drags on. And these are, again, permanent layoffs. These jobs are not coming back. And when we look at the economy, what did we see? We don't have, of course, initial claims and continued claims data from the government. Right now, our best guess is what Goldman Sachs is telling us. We're not seeing continued claims come down. We're starting to see initial claims rise, indicating that these workers cannot be absorbed by the economy. And that's one of the risks we're facing here of this escalation between China. As more people lose their job, they have no other options. And these are the strictest export controls that China has utilized. It's quite clear that they have sticks and the leverage to make not just U.S. firms, but firms worldwide comply. And of course they do, because when you control 70% of the supply of anything, you own the market. And right now, there is no other option. And there's not enough of that 30% supply to deal with the world's needs. And so China right now has everybody at their mercy. The question is, how will this all play out? How long will it drag out? Will it escalate? We don't know. But the risks are very real right now that we head into a recession. Let's talk about these IMF models. Now, we're going to go back to the last time we saw this rare earth issue, and they said at the time, if that were to stick, and remember it didn't, that we would see 0.5 upwards of 1% inflation. Now, you think of this from a central banker perspective. We're already hearing now from the Trump administration that we're going to have a CPI report in time for the Fed meeting. But what's going to happen now with this rare earth export? Of course, what is the Fed going to be worried about? Rising inflation. Again, I think my prediction here is the Fed doesn't cut rates. We'll see what happens as we get closer to the meeting. But notably, what's the issue that consumers are facing? They can't afford inflation at its current rate, let alone if it goes higher. And so what's going to happen is demand is going to drop further because the dollar isn't going to go as far. Consumers are going to have to cut back even more. And we're already hearing from companies. They're not planning to hire big over the holiday season. And a lot of companies are saying, look, if demand doesn't pick up, we're going to have to lay off. And on top of that, we're facing losing $200 billion in exports. And again, with that, it's going to go jobs. This is going to have a huge impact on the Midwest of our country. Think about the farmers here. They are going to find out that the situation that is already grim for them is about to get worse. And estimates conservatively are saying 200,000 to 300,000 jobs are going to be lost if this holds. Now, if imports crash and this 130% tariff level holds, and we're all hoping it doesn't hold, we're hoping that this is just posturing on both sides as something is going to get worked out, the dollar highly likely to go higher. And here's the proof. I want you to see this chart of imports of goods and services against the nominal broad dollar index because it is very clear about what's to come. Now you see imports of goods and services in blue, and I want you to note how they decelerated and contracted below that horizontal black line right in the middle of financial crisis. What happened with the nominal broad dollar index in red? it shot higher. Now you see it happen again right around 2013, a little contraction of imports, the dollar rallied. You see a contraction around 2015, 2016, when the world almost headed into a synchronized recession. What happened? Dollar rallied. How about around 2018? Imports decelerate, contract, the dollar goes up. 2021, same thing happens. Right now we're seeing imports drop and the dollar went with it, but that is likely to reverse in a big way. But let's talk about the real economic impacts here. We don't have enough supply to keep our factories running. And this is exactly what China knows. Now think about this from a manufacturing perspective. Who has a lot of excess capacity right now? Well, that's China. And who has rare earths? That's China. So what do you do if you have too much capacity and not enough demand? You shut down your competitors, and then you get your business back. And this is what's going to impact, of course, U.S. manufacturers. And China knows this. If you don't think they do, because last time, what happened? We saw all these CEOs go to the White House and say, look, we got to get this solved, or a lot of people are going to be on the unemployment line. And here's the evidence. Let's take a look at this chart of capacity utilization against the unemployment rate. That's shown in red, and you can see when factory capacity drops. Now, I want you to be thinking, this is what's happening in China right now. The unemployment rate goes up, and you can see that going into every recession. It's a near mirror of each other, and that's the risk we're facing right now. You start shutting down factories, and businesses don't have the money to keep their employees there. But that's the issue China's facing is, look, rising unemployment. So again, what do they have to do? Shut down their competition. And again, this is likely to impact every household. And we haven't even talked about how much money could be lost in the markets. But that's not something I want to see happen to you. So how do you turn this panic into real profits in your pocket? Because one thing we don't know, is Trump going to meet with Xi? We don't know. Now, the APEC meeting, that's on Halloween. So we've got a couple weeks away and a lot of uncertainty. So if nothing changes between now and then, look for more carnage in the markets. Because one thing markets don't like, that is a lot of uncertainty, and right now it's at the highest level. But watch the dollar again. If it rallies on Monday, that is the warning sign. If you start to hear signs that lending is drying up, how about repo fails? If those start to increase, if you see short-term overnight rates surge, those are all signs of stress in the financial system, and what it's telling us is this is only the beginning of what's to come. So if you haven't made adjustments to your portfolio yet, you still have time. You could cut back some of your positions, look, to go long the dollar. Maybe short the euro or yen. You can even be long U.S. Treasuries. And here's the idea. As this gets worse, those are likely to rise in value. You're going to turn around, sell them later, and buy back into risk assets. But what I want you to see here is China is going down, and they're trying to take the rest of the world with them. But with your new blueprint, your portfolio doesn't have to go down with them. Now, when it comes to trading, my subscribers have the edge. And you can see right now in real time why risk control matters. Let's take a look at my meta strategy. Now, we're making a lot of updates to this, but I want you to see the edge here and what is a complete optimized strategy. This takes into account 9 different trading strategies. Look at this. Over the last 2 years on SPY, total return 71%, beating buy and hold. How about the win rate? 66% on 69 trades. Max drawdown right around 7.5%. Now, we're not factoring using any stop loss levels. This is just a pure back test. But how about against an unoptimized strategy where you can't even use it by itself? You have to use other tools and watch your screens all day long. How about this? Bravo 9, it's run by my buddy Jay Bravo. Total return 51%, missing buy and hold. Mere 33 trades, but look at that win rate, only 51%. Drawdown about the same. So not only are you using a system that doesn't work if you're trading the Bravo 9, you have to use other tools, spend a lot of time and a lot of other money. With my system, all you have to do is log in, look at the reports, put the trades on, put your risk control levels on, and then go about your day. Now, how do you get these trades? Well, you got to sign up for one of my reports. Now, our CTA Time Pro, this is my flagship report because when it hits big, and we trade against machine position. We try to get in before the machines buy and out before they sell. Now, maybe you like to trade those technical indicators, but you find yourself getting in late and out early and all over the place. Well, we pair that with a trend. We call that Momentum Timer Pro. Now, what is our meta strategy? It is an advanced trading system that currently combines 10 professional trading strategies, soon to be 11, and is perfectly optimized for swing trading. I've optimized it to target a 10-day hold period and generate a large number of trades with a very high win rate, making it easy for you to make money in the markets. Now, what do you get? You get the daily report for whichever system you sign up for. You get all the tradable systems from that report, plus the meta strategy trades. You get my opinion on the best trades, risk control levels, a full tracking of all open trades and returns, a weekly update, and here's the best part of all. Whether you're new to trading or maybe you're already signed up for other reports, I'm going to give you 30 days to test it out because you can see right now in real time my subscribers are doing well and you can join them very easily. All you have to do, grab those links in the description below, use a coupon code for your free 30-day trial. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.